South Africa has seen a growth of 1.2% of its economy in the second quarter of 2021, which signifies a 19.3% increase from the previous year when the economy was hit by a hard lockdown. However, the South African economy is still 1.4% smaller than it was before the pandemic, according to the country's statistics. More in this report.
Transportation, communication and agriculture were the big gainers, helping to lift second quarter GDP. Growth ticked up 1.2% between April and June from a revised 1% between January and March.
I think second quarter data was encouraging in the sense that quite a couple of sectors did report some positive growth, which is good. However, it was a bit difficult to forecast given that we had the huge benchmarking and rebasing exercise that the results were just published a while ago.
The economy is usually rebased every 5 years to give a better assessment of goods and services. South Africa's economy is now up 11% at $370 billion, still behind Nigeria's $432 billion.
This time around, we had quite a significant upward revision to the overall size of the economy. You'll recall that for the average period of 5 years, I think it was about 9.5% bigger, but for the last year, 2020, it was 11.3% bigger. So the size of the economy is bigger. However, the growth rate from year to year did not differ a lot. So the trend as to what we experience in terms of activity has not changed.
South Africa's growth is still coming off a low base after a massive contraction due to COVID and the subsequent lockdown restrictions. The growth is also not enough to stem rising unemployment that was a problem before COVID.
Unfortunately, the secondary sector, which contains things like, for example, manufacturing, that sector is under pressure and it actually contracted in the second quarter. That's the sector where we need economic growth. Because that is a sector where we can potentially reduce unemployment as well.
The impact of the recent rioting and looting that caused enormous damage to business and property is likely to dent this current growth momentum.
We also know that commodity prices have softened relative to the first half of the year. That was, one of the key drivers of quite a stellar performance in the mining sector, and that's also likely to soften going into the second half of the year. We know that medical experts are also suggesting that we may hit a fourth wave of COVID-19 infections come November this year, and that may lead government to increase the restrictions on economic activity.
Most quarters are celebrating these numbers, but many economists are urging government to do more about structural reforms in order to boost growth and create employment opportunities.